Hello, guys. So this is the post-market analysis of 15th of April, and today's market setup is clearly positive. The oil is cooling off, and we have seen a strong US market, and the geopolitical fear is also coming down. So there is an easing of those, geopolitical tension. So because of that itself, we are looking for some good gap up. In fact, around 200 to 250 point gap up, and any dip is as of now looking like a buying opportunity. So yesterday our market was closed due to holiday. So today market will react to, two sessions of US market, that is Monday and Tuesday. So let's see what happened on Monday. See, Monday, before that weekend, there were discussion, right? US Iran talks were there and that failed. And Trump have also taken an aggressive stance that he is going to block the Strait of Hormuz. So the expectation that the market should fall, and in fact, we got such a big gap down also, and then market have recovered. Then US market, what actually happened is US market have actually closed positive, right? So the reason is you can say that US Navy blockade, though it was discussed, but there was some clarification that ships from other countries will be allowed. Initially, it was thought, even I also interpreted like this, if it is coming through the Strait of Hormuz with the permission of Iran, then US is going to block it. Otherwise, Iran is going to block it. So no ships are going to pass. But the scenario is different. The clarification is that the ships from other countries are allowed, right? Only if it is touching and coming from Iran, then it is not allowed. So if you see last 24 hours, almost 34 ships have been passed through Strait of Hormuz, which is a very positive sign. On a normal scenario, 6 to 70 ships used to pass. And during this issues, right? When Iran was completely controlling, 2, 3 ships were allowed to pass only. Now, during the negotiation also, what Iran said is we will allow 15 ships per day. But now, if you see that 34 ships itself is a bigger positive, right? So that's like a strong improvement, and market interpreted this as there is no major supply disruption in the oil. If 34 ships are allowed to pass, means in future it will be definitely improved. And there are further development also. US have deployed almost 10,000 marines and warships and aircraft, and that means US is trying to enforce that blockade. But there are positive signal also, right? Reuters reported that US and Iran again showing willingness to talk again. So there is a possibility that they will come to the table and they'll talk again, and there can be uh, some kind of agreement which will come, right? And there were some additional development also. US, Israel, Lebanon, they agreed to start direct negotiation, right? So again, this is related to the Lebanon issue, because Israel have told that the ceasefire and everything that was specific to Iran, that was not part of Lebanon, attacked Lebanon, and in almost 1 hour or 10 minutes they destroyed almost 100 areas in Lebanon and killed almost 300 people. So Iran again got aggressive, right? So it was clarified that it was not part of Lebanese or Lebanon or Hezbollah. Now US and Israel is going for direct negotiation with them also. So that is again another positive. So the market narrative is that this conflict may move towards resolution, right? Now, already, if you see, our market is very deeply down. Our market is not, 26,300 September 2024. Now we are in 2026 April, almost 2 years. Even the all-time high itself is, that is made in the last 2 years. So think about the return. So if we get this, issue sorted out, our market have to rally now, right? And almost all good stocks are also corrected very good, and these are very crucial buying point. So the next year that we are looking for, from a move from here to at least 27,000, and potentially by 1 year there could be a move from here to 30,000 also. So we are now at 24,500 level. It can move to 30,000 in 1 year is what I'm expecting. If not 30,000, at least 27,000. So there will be a good rally, and the market is now very clearly buy on dip. So the tension is coming down, right? Supply side issues have sorted out. Apart from that, US inflation data also came, and it was slightly higher. That is due to this energy prices. So if you look at the core PPI have slowed significantly. So market again interpreted this inflation as not broad based. It is only like because oil driven. And if it is oil driven, once the oil price is cooling off, when the issues sorted out, then this is going to not be a big problem. So Fed can reduce the interest rate later. So that again taken market as positive. And if you look at the oil, Brent crude have almost fell almost 4%, WTI almost fell 7%. And the current price, WTI is 92, Brent crude is 95. Now coming back to that normal scenario, below the psychological level, best level. So oil is back below 100. That is the most strong positive for the market. Apart from that, now Brent regained the premium over WTI. So earlier we know that WTI is lower than Brent, right? But during this issue, what happened? US oil started trading with a higher premium and WTI was going higher than Brent. But now WTI lost that premium and the Brent premium is slightly higher. That is a normal scenario. What does that mean? Market is now moving towards a normalization. What it was before, now it is the same. Apart from that, there are some important earning reports. And last night, US markets, if you see Dow have closed 0.66% up, S&P 1.18%, and Nasdaq almost 2%. VIX have dropped 18.5%, dropped to 18.5%, which is a significant improvement. So last 2 days, the important three reasons, if you see for the rally, one thing is now clear, 34 ships passed, so no disruption in oil supply. Though there were some, confusion with respect to Trump's blockade, but now that has been very clear. Better inflation data and strong earnings. See, these are the three reasons why US market have rallied. Now, Gift Nifty also, if you see earlier, it was showing something 23,850 that day, and now 24,290. So even if you are adjusting with, we have around 15 more days, so if you adjust it with even 50 points premium, right, for 15 more days, considering the bullishness, it can be slightly higher also, but still 250-point gap up is what we are looking for. And any dip is a buying opportunity. And if you look at the ADRs, ICICI Bank is positive, Infosys is negative, HDFC is slightly negative, Wipro slightly negative. So take care of that, right? Then there is an issue which is going on with respect to this TCS, which I am not discussing in this pre-market analysis. There is no need to discuss that. But one psychological negative is that we can say it can affect the IT stock sentiment. Apart from that, if you look at institutional data, FIA sold again for 2,000 crore, DIA is bought for 2,500 crore. And coming to open interest futures, open interest have increased 6%. Options, that's expiry day. So call option 34% unwinding, put option 35% unwinding. So it's almost equal. PCR almost remained the same, but slightly positive 1.07. And participant positioning also, clients are 18.7% bullish in options. FIA is 17.9 bearish in options. Prop traders are neutral 0.9%. In the futures, clients or retailers are 74% long. Prop traders are 52% long. FIAs are almost 80% short, 78% short. So technicals, if you see last day, that was an aggressive move on the upside, though slowly, but continuously it was vertical up move, 460-point gap down. And after that, when the clarification was there, so that itself was the low. I think 23,550 was the low and closed at around 23,840, and 900 have also closed at one point. So almost 400-point positive up move we have seen. And you see a long bullish candle. That's a strong recovery. The structure also reclaimed, right, that 38.2% Fibonacci retracement, and now came above 20 moving average. That is also looking good. So RSI is also now above that reference line of 40, which is again looking good. So now the important levels that we need to look at is 24,000, 24,100. These are resistance level. After that, 24,200, 24,300. Support now, that crucial support, last day's low, that is 23,500. Bank Nifty also opened around 270-point gap down, and then it just went almost till to 54 300 level and closed at 55,600. That was also a good recovery. There is a strong long bullish candle again, you can see. So options maximum open interest on the call side is 24,500, and then 24,000. 24,000 could be the straddle players. 23,800 also there, 24,300 after that. Put side it is 23,500. So the range is expected to be 23,500 to 24,500 for this next expiry. That's the 1,000-point range, which means around 700-point on the upside, and downside is limited as of now because of the developments which have happened. So put side 300-point down from the current price. But anyway, you're going to get around 200-point gap up. So it will be around 24,000 plus. So 500 you can consider, right? So the expected range is this 23,500 to 24,500. So oil is below 100 itself is a bigger positive. US market have given strong rally. Our market will also react to that. So geopolitics tension is there, but things are improving, right? So keep all these in mind. And it looks like buy on dips in today's market. See you tomorrow.